So we have two big problems. And then I think we have a third that's kind of funny. The first big problem is like, obviously, in the absence of any regulatory oversight, this stuff is going to happen. Systemic risks are going to build up. That's what we're facing right now, is an enormous amount of systemic risk, largely around Bitcoin. A bunch of this money, I think, has been essentially just vaporized. And so all these people that try to find their deposits, especially in custodial accounts in off-chain brokers, may be SOL at some point. And I think that's just going to be a huge shit show if that actually happens.
Hello and welcome to Smart Tech Ideas. In today's video, American and Canadian venture capitalist and CEO of Social Capital Chamath Palihapitiya updates about Bitcoin's price activity in the last few days, how the Terra Luna collapse exposed the crypto ecosystem, and why systemic risk is on the rise in the cryptocurrency industry. Make sure to stick around till the end of this video where Chamath explains why crypto is facing extreme market conditions and why a potential Bitcoin fallout on the horizon. If you like the video, don't forget to give it a thumbs up, subscribe to the channel, and turn on the post notifications. So without wasting any time, let's dive right into the video.
Bitcoin activity as a function of year and value. Nick, can you just put that up just so that we can look at that together? The crazy thing about this chart when you look at it is, and it's pretty obvious, is that we are collectively in one way, shape, or form basically trading up ever since 2018, really, with all the stimulus. Because if you look at, the mean price of Bitcoin, 2018, it was a nothing burger. What we were talking about was, a price that was sort of between a few $1,000s, $2,000, $3,000,
10,000,
and then 3,000. And then all of a sudden, when all of the stimulus money hit the market, look what happened to it.
Yep.
But I think something unique also happened, which is that people really understood how to run these very complicated off-chain Bitcoin ARBs. And I think we should explain what those are, because those are what's behind the Three Arrows Capital. It's behind, I think Sam had this kind of oblique tweet that said, some of these exchanges are actually already insolvent. They're already the walking dead. So the first thing to keep in mind is that, this is a completely unregulated market.
Whales have kept buying Bitcoin tokens aggressively as prices have dropped, according to data from the blockchain that shows large addresses are adding to their holdings. Due to the ongoing crypto bear market, the price of Bitcoin has dropped from around $69,000 in November 2021 to around $19,000. This is because people are afraid of inflation, interest rate hikes, and the war in Ukraine, which is making people less willing to take risks.
So what happened starting in 2018 and 19 is people realized the following things were true. It's sort of what we talked about last week. You go and do some crazy round. You mark up some phantom equity in a company. That company then issues tokens. You then list the tokens, not on a blockchain per se, obviously, but in a place where trades can happen off chain. Right. And there's a bunch of exchanges where these things happen off chain. And what happens is when these things initially get listed, retail goes crazy, the price goes up, folks basically dump on retail. And, you spin that loop as fast as you can, and you can extract an enormous amount of money. Along the way, all these things like DeFi all of a sudden popped out of nowhere. And it's like, hey, you can earn 15, 16, 17, 18%, just deposit the Bitcoin. And so folks would deposit Bitcoin. But then what would happen is like the places where those deposits were held would then need to obviously find places to make that 11, 12, or 13%. And so then they would go off chain to some other random person who was offering to pay them even more than that. And they would try to arb the difference. But it all catches up with you, because when something like a Terra goes to zero, all the Bitcoin that was used to basically, run that DeFi process around Terra vanishes. And then all of a sudden, you, the lender, are like, hey, can I have my Bitcoin back? And the broker's like, well, actually, I don't have it. I lent it to somebody else. Let me ask that someone else. And they're like, I'm sorry, I don't have it, but I have these Terra coins, because I was running some ARB and now it went to zero. And that's essentially what we're seeing right now.
This year, the sell-off in the cryptocurrency market was made worse by companies that were having trouble. These companies have been laying off staff and stopping withdrawals from their platforms, citing extreme market conditions. Reports say that Celsius Network has been told to file for bankruptcy, and both Babel Finance and the cryptocurrency exchange CoinFlex have frozen withdrawals. Whales with more than 1,000 Bitcoin have kept buying coins at a discount compared to last year. During the last multi-year-long bear market, Bitcoin whales took advantage of the situation to buy a lot of coins.
You have absolutely zero oversight, which means systemic risk has been built up in the system. The second thing is that exactly what you just said, Jason, is that people don't even understand chain of custody here, which is that you thought that you owned this Bitcoin. It turns out you actually may not actually own them at all. You thought that you were properly lending them out. You actually don't. There is no enforceable contract, it turns out. And so I think that's going to be an entire set of different legal issues that are now going to come to the surface because people who actually legitimately lent this stuff out, for example, like if you short a stock and you go and borrow stock from any one of us, there are really tight guardrails. If you wanted to go and put a credit derivative swap on against debt, there's a central clearinghouse that makes sure you're not over levered. You have to go and get audited by a bank to even get the kind of account that allows you to put these derivatives on. None of that was possible in crypto.
On social media, the blockchain analytics company Glassnode also said that whales with more than 1,000 Bitcoin typically go through accumulation or distribution cycles that are often in line with the structure of the Bitcoin market. The company says that these entities are aggressively adding to their balance by buying 140,000 Bitcoin per month from cryptocurrency exchanges. Even though the bear market is still going on, Crypto Compare Research's Digital Asset Management Review showed that the 21 shares short Bitcoin ETP, which seeks to provide a 1x return on the performance of Bitcoin for a single day, had a 30-day return of 30.8%. This is the third month in a row that the product's assets under management have gone up, reaching a new $16.5 million all-time high this month.
A Bitcoin has a legitimate non-fungible entry in a blockchain that says it and only it represents that thing. And I think that some may call it tenuous, but I tend to think at this point, Bitcoin probably has to be regulated like a security, even if it is not, and it's more of a commodity, only because of the volume and the sheer size of both the market and again, as I've said, look, if you're a market participant trying to trade, very sophisticated, derivatives of any kind, for example, in the credit markets, we have to go and we create these things called ISDAs. They're called ISDAs, and it's basically a kind of an account that allows us to go and take risk in some of these very esoteric markets. But the underlying principle around that is a common set of parameters, a clearinghouse, the ability to monitor risk. None of those things exist here. And I think that's really what folks have to solve for now. Secondarily is what were all these kind of shadow activities? It seemed too good to be true when you would hear, wow, this DeFi protocol will yield you 24%. And you're just like,
who was paying the 24%?
How is it? It never made sense, really, but then none of us really questioned it.
So, do you agree with Chamath Palihapitiya that crypto regulation must be done to prevent crashes? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.